Ladies and gentlemen, members of the press and distinguished guests, I am Tom Powell, Super Chairman of the Board, and it is my pleasure to thank you for joining us for the most important FOMC across all timelines, multiverses, and dimensions. Thank you for joining. I would like to begin by acknowledging our dedicated efforts of my colleagues at the Federal Reserve and the members of the Federal Open Market Committee, specifically 𝐂𝐴. Our collective work has been focused on navigating the complexities of the current economic environment and making informed decisions in the best interest of the American people. Throughout this year, the Fed has been unwavering in its commitment to achieving our dual mandate of maximum employment and price stability. We have closely monitored economic indicators, and we have adjusted our policy stance as needed. Our decisions have been data-driven and aimed at fostering a robust and sustainable economic expansion. In January, we voted unanimously to keep the federal funds rate unchanged at 5.25 to 5.5%. This decision reflected the committee's assessment that the economy was stable and inflation was making modest progress towards our 2% target. In March, we again voted unanimously to maintain the federal funds rate at the same range. The committee noted that the economy was expanding at a moderate pace and the labor market remained strong. We also revised our inflation projections for 2024 and 25, reflecting our confidence in the path forward towards our target. In May, the committee voted to keep the federal funds rate unchanged once more. We acknowledged that the economy was growing at a solid pace and that inflation was gradually moving towards our 2% target. We also discussed the potential of future rate adjustments, depending on economic data and financial conditions. Again in June, we held our policy rate steady. The committee again noted our moderate pace and labor markets remain strong. We once again revised our 2024 and 25 targets, reflecting confidence in our path forward. One last time in July, the committee voted to maintain the federal funds rate within the same range. We acknowledged, again, the economy was growing at a solid pace and that inflation was still gradually moving to our 2% target. Throughout these meetings, we have maintained a cautious approach, balancing the need for continued economic growth with the need to control robust inflation. Our decisions have been data-driven and aimed at fostering a robust and sustainable economic expansion. As we continue our work, we remain dedicated, maintaining a transparent and accountable approach to monetary policy. We understand the far-reaching implications of our decisions, and we are committed to communicating our actions and rationale clearly and effectively. In conclusion, I would like to express my gratitude once again to my colleagues at the Federal Reserve for their tireless efforts and unwavering dedication. Our work is not yet done, and we will continue to monitor economic conditions and make informed decisions in the best interest of the American people. Lastly, I have one final official message. For the sake of the U.S. economy, Gina and Asian Gina must reply to Tom Crown's texts. Our hope depends on it. Thank you. Shout out to the Tom Crown community. Let's freaking go, boys. Oh, wait up. I'm getting a text from Chairman Powell. Hold on. Let's go. There's no data. There's no data.
Chairman Powell making paper every hour. Chairman Powell, he got that money power. Data on his side.
There's no data.
Yeah, he's the chairman of the board making moves that empower.
Send it. Let's go. Let's go. What up? What up? Welcome back. Welcome back. The security around having Tom Powell here was absolutely insane. We had the Secret Service. We had the even secreter service. I could barely get to the computer, but we did it, boys. We're back for the last FOMC until, geez, what is it? September. So, little rundown. At the start of the year, everyone, including the Fed, was looking for 5 interest rate cuts. Here we are. It's July. And in fact, we only have September, November, December, 3 left. So that 5 interest rate cut target was cut down to 3 in this year. However, there's only 3 left. There's only 3 FOMCs. So there's only 3 opportunities to do so. You guys know what I've said. I don't think we see them at all this year. Maybe I'm wrong. Maybe we will. Kind of on that note, here we are. This is our probability CME Fed tool watch. This is gauging the probabilities of what the interest rates will be at said dates. Oh yeah. I had to throw a blanket over that because this chair was in the way. Actually, I don't mean to kill the momentum. Keep the hype up. It's bothering me that the green screen is flickering. Here we go. Instant fix and done, maybe? Done? There it is. All right. The probability dictated in these boxes here and the dates at to which they will be and the interest rate that's being speculated on. Essentially, the CME puts it at a 95% probability that the rates remain unchanged today. I think that's the outcome. There is a very, very low chance, I won't even say less than 5%, that we'll see a 25 BPS cut. What gets interesting here, this is like the takeaway from this chart, is that into September, CME is gauging a 0% probability of us being at the same interest rate. I think that's kind of crazy. What do you guys think? That seems bonkers to me. 0% is not an acceptable percent. It's not even like a real percent. Whoa. That didn't work. Anyway, they're saying 86% into September, and this is like the weird part. So 86% into September, yet a 1 in 3 chance of it then being unchanged. I'm still skeptical about September, but 1 in 3 chance of it being unchanged. If in any of these FOMCs into the end of the year, we don't see a hike, we don't hit that 3 target. So I think this is very unlikely. I think it's unlikely. I'm still of the opinion that if we get one, I think we're going to get it in December after the election. And then maybe into the start of next year, we see these interest rates actually get slashed down. But the market is basically pricing these in. And here is my issue, or here's what I think we should pay attention to. With a 100% chance, or basically full confidence, we will see interest rate cuts and then cut again and again. The market is going to try to price that in. And if there are any mix-ups, so let's say CPI comes in between now and then, we get a hot count, we don't get an interest rate cut, the markets are going to panic. Markets love certainty. Markets, they don't really care as much about bullish, bearish, hawkish, dovish. They care about being able to plan and look forward and then make decisions now based on that. So any mix-up going to likely spell some pain. It's going to be a very spicy next few months. And I'd like to thank you guys for joining us. I know you have a choice in your FOMC viewing pleasure. Lots of people cover them now. We're the home of the FOMC. We've been doing this for years before everyone else caught on. And I appreciate you. Why is my buttons not working? One sec. We're going to play that Jerome Powell song again while I kind of troubleshoot this. Does that work? I love this song.
Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal reserves in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him.
Whoop. I troubleshot that not so well. I'll play it again. Stream Deck. Making me look bad. There we go.
Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour.
Got it.
Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
That song's never going to get old. It's never going to get old. I've listened to it on repeat for hours. Love it. You can find that song on the channel. It's on a short. Just look at the shorts tab. Look for a picture of 𝐶HPOW. Powell. You can listen to it on your own time. So what was I saying? I got my buttons working here so I can throw the Discord link into the chat. I can throw messages into the chat using my Stream Deck. I got it operational. Join us in the Discord, by the way. Join the fam. In front of us, we have our typical FOMC stream chart setup. We have 3 charts on top, Bitcoin in the middle, the dollar, and the S&P 500 at the bottom. Occasionally, we'll throw in gold, but we'll see. We'll see. So if you're joining us and you're confused as to what's happening, we do have a little bit of time. We started this one early because I owed you guys some streams. I was in Nashville at Bitcoin 2024. I had a great time. Probably tell you a little bit about it, but let's get through the basics first here. Owed you guys some time, some charts. Not a lot has happened since our last stream, but we'll jump into them anyway. It is currently 1:22. So in, let's see, 35 minutes, we'll begin our traditional Googling of the interest rate decision. And so it's 2 p.m. The official interest rate is, for some reason, released. Wouldn't it be cooler if like 𝐶HPOW Powell said it during the FOMC? If like that's when everyone learned, that'd be cool. I don't know why they don't do that. But they released it at 2 p.m., so in about 45 minutes. And at 2:30, 𝐶HPOW Powell himself speaks. After that, we have the questions and answers from the journalists, the esteemed people there, and that's actually some of our favorite sauce. Hopefully, we'll have some protesters. We'll have maybe some cursing from 𝐶HPOW Powell. Who knows? Sky's the limit, baby. Sky's the limit when 𝐶HPOW Powell is on. He is a celebrity. What should we do first? What do you guys think? 𝐶HPOW Powell. 𝐶HPOW Powell. Say, pay your tax. Can I get 𝐶HPOW Powell in chat? Let me get some 𝐶HPOW Powells in chat. If you got the emoji, put the emoji. If you don't got the emoji, just all caps 𝐶HPOW Powell if you'd like. I'd appreciate it. Normal warnings. Well, we get them 𝐶HPOW Powells. Normal warnings going into these. So we see some very volatile, but in some ways very consistent price action. There we go. 𝐶HPOW Powell. That's right, Dave. What's up? What's up, Matthew? Mr. Schmeedy. We see some very volatile, but at the same time, very consistent price action for the FOMCs. Provided there is no insane mix-up. Like 𝐶HPOW Powell doesn't come out and say 100 BPS cut, let's go, or something, or interest rate hike, right? Let me show you. Typically, into the meeting, we will see price trending in a direction. Whether it's up or down, I haven't noticed any bias. So let's look really briefly here. Looks like yesterday we saw our low 65.2, and since then, I think reasonably we have trended up. Not a very strong trend, not a moon trend, but price has hit higher highs and higher lows. That's the definition of an uptrend. Typically, we see price trending in a direction, right? So up is the choice here. Even on the 1 minute, we're seeing a little bit of upside. What we tend to see is as soon as the interest rate decision is out, so at 2 p.m., we tend to see that reverse. So let's draw this arrow. When 𝐶HPOW Powell himself speaks, we then again tend to see price reverse. That's 2 reversals. However, almost every single time, we don't see a continuation of the beginning or original trend, in this case to the upside. We see price return to roughly where it started. So let's say right around here. So my warning to you is trading this event is very risky. It is very volatile. And as you can see from basically just these arrows, price tends to whip out or stop out longs and then shorts and then goes right back to roughly where it is. So the odds of a leveraged position being stopped out here or even liquidated if it's over leveraged are pretty good. Pretty good. I like to caution you not to trade this. I don't typically trade this. We really don't usually open trades during this because I don't want you guys getting wrecked because I love you and I care about you. I don't want you to get wrecked. If you are going to trade this, I do wish you luck. I wish you the best of luck. I wish you moon. I wish you many dollars. But use one of the links in the video description below. At least that way, if you get wrecked, tiny bit of that fee comes to us, supports our channel, helps us out. And if you sign up with any of the links in the video description below, you will get our exclusive VIP access in the Discord to our trading group. So that's the best offer out there. Be wary of this. Be wary. This has caught many a person off guard here. So let's make these a little less visible so we can actually look at the chart. Should we do a little corn? Should we do a little corning? A little corning? You know, maybe the little corning should start with the dollar. What's the dollar been up to? Nothing good. Nothing too good here. Has that changed? Not really. The dollar, let's see, back about a week ago, 2 weeks ago, broke its multi-month support. Traded lower, and now making one of the weakest looking climbs I've ever seen, but it's the dollar. This thing moves weird. Back up to a lower high. We've seen today's range low broken. Dollar looking a little weak. I am surprised, actually, that the dollar looks so weak, yet we are seeing stocks, Bitcoin not showing strength. So the correlation that I love to harp about the dollar going down, everything else go up, vice versa, does not seem to be in play here. Remember, correlations are never 100%. They can be very common. They can be most of the time, but they are never guaranteed. And here we go. Dollar down the last 2 days and trading it over to the S&P. What do we got? A little green on the day, but you can see not following completely inversely. S&P closed on Tuesday down with the dollar. A little bouncy here, but that candle is not enough to get me excited. That is not a very spicy candle. Let's pull up our SP chart. Here we go. S&P almost just looks like it's coming back to fill 550 as a gap. After trading down below previous resistance, testing it as support, lower high, fell lower. This is not a great look. Are you guys bullish or bearish on stocks? I think they've had their run. Bring it back to us. Get out of here, stocks. You've had your run. We don't want to see you go up anymore. Or you can go up more, but you have to let Bitcoin go up. There's my deals. Overall, I would say dollar has shown weakness. Stocks have shown weakness. Bitcoin has shown weakness. So where is the money flowing? And I haven't looked at this chart. Let's go over to gold. That's the only real option I can think of. What's gold doing? Gold, here we go, baby. The gold actually still rolling with that inverse correlation. Gold hit an all-time high on the 16th of this month before retracing, falling down to the golden Fibonacci retracement level. That's 618. Boom, baby, right here. Boom. 2,360. I will admit, I thought we were going to see a bounce higher. I thought we were going to bounce like 2,400. Did not happen. All the way down to the 618, and now trucking, moving its way back to what looks like April, the previous April all-time high. This is not bad. If gold can move past 2,430, last Tuesday's high wick, I think it's moving right back to a new all-time high. This could be a higher low. A retest of that high will give us a new extension. Oh, I'm excited for this. There it is. Using our Fibonacci retracement and extension tool, which is one of my favorites, you guys know. If you don't know what it is, there's great videos on our free trading course. Everything's free here. On our free trading course on the channel, watch that after our live. Our new local extension, provided we do break to a new all-time high from here and hold this low, 2,568. Man, gold really is. We think Bitcoin is boring. We think it's like watching paint dry. Gold is like watching paint dry in slow motion. In absolute slow motion. Ooh, on top of the FOMC, so this is really spicy today. On top of the FOMC, we also will be wrapping up our first month in Q3 of this year and July's monthly candles. So that's going to be worth looking at. Let's start from there. Gold, higher high, higher low. Either way, looking to close this candle very strong. Let's go over to the corn. Wow, it's been a while since we streamed this TA, man. It's been like a week plus. Probably the longest we've been not going live. Pretty bonkers. Last time we were live, I think this was Friday or Monday of last week. We were looking at our little diamond here. Who remembers this? We were debating, is this reversal or is this continuation? And if anyone that bet reversal, you're the winners. While we did not break our range low, we did not break our lowest point, so we don't have a lower low. We did trade pretty crappily down from there into this weekend, moving back almost, just barely, touching 70K, not quite, before falling down again. This is not a very comfortable pattern, is it? Higher highs and higher lows, yes, but this is starting to look like some kind of broadening wedge. Don't want to be seeing broadening wedges on the way up. Not my jam. Let's go to that month. You know, actually, we'll do it on the FOMC chart. That's right. Whoa, my man, Jason Casper. My guy. How you doing, brother? Been a while. Been quite some time. If you guys aren't familiar with this man right here, the man, the myth, the legend, Jason Casper, thank you for the super chat. Give him a follow. Great dude. Does a lot of great trading content. One of the few I respect in this space, hands down, no questions asked. Appreciate you, brother. Let's do the month. Let's do the months. We'll do the months. Yes. Ooh, it's hot in this room. I'm going to turn on my air conditioning again. Our monthly did exactly as we were looking for here. We were only looking for 67.5. Basically, last month's open on the corn. We've tested that. We haven't broken past what is like a double top at 72K this month with 6.5 hours to go. I love saying there's always time, but man, it doesn't really look like there's time, does it? The battle for this monthly close. So for today on the corn, above 67.5, going to be a much better close than below than where we're hanging out now. That is a very small move. What, a move of $1,000 now is 1.4%, something like that. Possible by the end of the day. On the flip side, the bearish close under 62.7. If we lose the green candle here, all of a sudden the story changes up. At the moment, and especially at that 67.5, we have what looks like or potentially is a hammer candle. It's going to look better if it closes higher. If we lose our open at 62.7, this red candle forms, and all of a sudden this just looks droopy. Droopy. We don't want that. Do not want that. We have touched what looks like the bottom trend here and the top trend here. This is some very painful price action. 1, 2, 3, 4, 5 months now in a row. Very reminiscent in ways of a few times in Bitcoin history. Let's say 2019 for sure. I'll even say back here, 2023, very reminiscent in many ways, sideways for months. There are even examples farther back as far as like 2013 that look similar, but we're not going to do that. That's not what today's about. Let's look at this. This is an interesting thing. Here are all the FOMCs from this year. We can go further back if you guys like this, but here we are. Marked on the chart, every single FOMC today marked as well right here. And there definitely is an interesting correlation. Absolutely. What's interesting is you don't really feel this in real time. But looking back, we can see this. So starting in January, the end of January, all the way back here. Ooh, hold up. Go live, unlisted, go live. There we go. For our man making the short clips, I got to make sure the short video feed is on. Here we go. Shout out to you, my friend Gaud. January, back here. ETFs had just been approved for Bitcoin, and we saw selling. Of course, nothing plays out the way it should, right? In the Bitcoin world, good news, we see dumps. Bad news, we see pumps. Whatever. We had sold off on the ETF, the FOMC coming in hot on the 30th of January. And while this one I'll say is like kind of the least eventful, we did see price kick up then. We saw an uptrend, but that's actually not the point I'm making here. Looking at the next FOMC into March, we had reached a new all-time high. We had fallen from that all-time high. And what did? We put in a range low. We put in a swing low. From the FOMC, we reversed and went back to the top of what would then be a channel or a trend, whatever. So we had a move up, a reversal. Here we are again into April, at the end of April, right here. Price had fallen from that range high down to then what would be a low trend and reversed again, moving back to our range high or back to the top of our descending trend line. The next FOMC, June, right here, right at the top. So notice the pattern. We're at a low, we're at a low. Now we're at a high. Price went back to the bottom of the channel. So these 3 out of 4 at least suggest range, local, whatever reversals. Actually, there's one more I missed here. Where's do we have one in June? Hold up. Did I miss one? March, April, May, June. I did. Haha. I caught myself. One last one. June. Where did I get that one? June, July. No, I thought there was one here for some reason. No, because we've had January 30th, March 19th, April 30th, June 11th. So that's all of them. Then we have July today. Interesting. I think the only real difference here between any of these from a fundamental point of view is June. We saw a range high reverse to the low. The rest had been low to high. In June, we also had the CPI overlap with the FOMC. It doesn't happen every month. In fact, it doesn't happen that often. We could speculate that maybe that's why it was bearish. I don't know. It does kind of seem, at least in this year, that these have been bullish events. They've kind of saved price from moving down, except for June's. And the only difference is the CPI print on the same day. So here we are now, and let's be real. This is a little spooky, isn't it? So the last one, we saw a move down. We were at our trend high. Here we are again, basically at our trend high, and it's the FOMC. So do we see this again? Whoa, did we see this again? I don't think that's a bad bet. It's probably even a likely bet, right? We have spent a lot of time in this range, and we'll never really know until hindsight, until we break it. When we will. Could be today. Heck, could pump today. I just don't think that's the super likely scenario. So, okay, we covered the FOMCs, did a little monthly TA. I got some more interesting stuff to show you. Got some more interesting stuff. Hold on, hold tight. I'll leave them on there. They're not that distracting. So, daily. Singularly, these Bollinger Bands, pretty cool stuff. So Bollinger Bands, we've been a big fan of these over the last few weeks as price is interacting with them. Makes them a useful tool. On the day, we have touched the top of the band, and it does kind of seem like price wants to settle down, touch this 20 daily or the middle of the band, and then decide which direction to go. We haven't quite touched it. Very, very close, fractions of a percent, but that sits right below us as potential support. The kind of cool thing is if you then go to the week, what do you notice? They're almost at the exact same point. Like the average of the last 20 weeks in price is almost the exact same as the average of the last 20 days in price. That hasn't happened super commonly over the last few years because we've only had a few periods of this extended sideways price action with low volatility. So the weekly suggesting, we're saying you already tested the 20. Last week you tested it. You closed up. This week you've tested it a little bit more sketchy. So in 6 hours below 65.6, which was close to that monthly level. I forget what it is. Can't remember off the top of my head. Battling it out for that 20 again. I don't like it being retested. I would prefer we move back to the top of the channel. That's what we were looking for in our previous streams TAs. But here we are dealing with reality. Looking to close this weekly up. And if we do hold the 20, again, 72.8-ish, going to be that upside target for the top of our weekly bands. If we close below, so in the next 6.5 hours, if we close below 65.5, then we'll logically be looking for a test of the bottom bands, 58.4. For a pretty big sell-off, they'd be like, what, 10%? 12%? Pretty gnarly. What do we got? Ichimoku holding up, no changes there. Ooh, you know what? There was some cool like 3-week stuff. Let's look at this. 3 months. Actually, yeah. Let's look at the quarterly really quick. Quarterly still hasn't hit our quarter target. When I say quarter target, I don't mean it can't go past this or whatever, but at some point in this quarter, I fully expect Bitcoin to test 71.2, 71.1, to just go back, tag last quarter's open, sweep liquidity, and then make its decision, whether it's going to fall down or rocket to new heights. I wish I knew. I'm betting on rocket to new heights, but I wish I knew, man. There it is. 2 week, 3 week. 3 weeks kind of cool. Now, we have a lot of time in this 3-week candle that just printed, but 3 week closed up in a bullish engulf off of June's really ugly 3-week candle. Definitely showing some bullish pressure on higher time frames here. Did close slightly lower. That would have been a nice signal if we had closed just even a few dollars higher. But 18 days to go here in this one. August 19th, we'll print the next one. So if we use that same logic, we might be looking for that 55.8. I'm not sold. I'm not convinced. But looking at the previous FOMCs where we are now, and honestly, just looking back to the previous candle has been such a successful trading strategy for us since March. It's hard to ignore. I'm not here to think for you guys. I'm here to just go through my thoughts and you make your own decisions. Please don't just blindly copy me or invest anything based on what I say. I'm not a financial advisor. None of this is financial advice. This is just what I'd be doing at home by myself if I didn't live stream. 2 week also closed nice and bullish engulfed. Same kind of candle here. Bullish engulfed, tiny little teardrop-ish red candle. Weekly, we already looked at that. This is, no matter how you look at it, this is some kind of falling, broadening wedge. I mean, maybe it could be a channel, but I think it's a wedge, at least for now. Good end of the day. What time is it? It's 1:43. Nice. Nice. We got about 15 minutes. I'll wrap up my Bitcoin. I'll wrap up this charting. I just wanted to get through a little bit because I haven't been sharing the TA with you guys. 2 day. I wanted to go on the 1 day. There we go. 1 day. Okay. We tested our previous resistance as support. I know we were watching that level for, I don't know, since the 19th. Support held. We moved to higher highs. Higher low, higher high. We nuked down on the 29th and barely, let's see, did we hit the fair value gap? We did. Yesterday's wick low, filling in that candle body from July 25th, making our price action more efficient, more clean, more spicy. Battling it out for a bullish engulf on the day, 66.7. Going to be a beautiful close if we can get it, but really all bets are off. The FOMC, Chairman Powell starting. I don't even want to speculate what's going to happen, but that would be a very nice close, at least for the day. And I think that actually lines up pretty well with the week and the month. I think that lines up pretty well. Either way, higher highs, higher lows. So until this breaks, we are in an uptrend. Until this breaks. So that means we could come down even lower technically and still be in an uptrend, right? I'm looking for this to play out as this. Something like that. Higher low, break our channel, back test it and run. This is the bullish, I keep doing that. This is the bullish setup. I think I'm going to keep betting on this because I'm always bullish, baby. But that's what I'm looking for. Our moving averages couldn't have played any better here. Bullish kiss on the 20 and 200 on the day after trading below. Bulls rejected it, retook the 50, and the 100 daily moving averages held them as support, moved higher, tested the 50 again. I don't love that. I don't love that it retested the 50. However, that higher high and holding, this zone has definitely panned out on the charts. Watching these moving averages is a very important thing, in my opinion, for any trader on Bitcoin. You don't want to lose the 50. You don't want to lose the 100. If you do, you immediately look down to the 200 at 61.2. But at that point, it's going to be a harder argument to say it will hold. So you definitely have some significant support here. But trading below this range gets you in trouble pretty quickly. Pretty quick. All right. I think that's good. I think we chat with you guys, see who's here. We have, there we go, flirting with the daily high. Man, this is looking like the exact 𝐒𝐴 FOMC setup, isn't it? Rallying into the meeting. Look where we are. This line, if you remember, that is the daily bullish engulf. So right to the daily bullish engulf, and 𝐒𝐴, no, not 𝐒𝐴, and the interest rate decision comes out in 14 minutes. Typically, we see price reverse whatever local trend it has, and then again when 𝐒𝐴 speaks, but that's set up too conveniently. I don't like that. I do not like green eggs and ham. I do not like them, Sam. I am. All right, let's do this. Take a look. Dollar trading sideways into this. S&P trading sideways into this. Not a surprise. The market kind of waiting, gauging what's going to happen. Looking for that interest rate decision, though. Let's be real. We already know what it's going to be. We're going to have fun with it, but we already know what it's going to be. This is not a mystery. It would be interesting if they did cut rates today. I give it like a 0%, but it would be interesting. That would shake things up, and it would make it possible to have 3 cuts this year without doing 3 cuts in a row. Be an interesting setup. That would cause some wild volatility. So here we go. Here we go, fam. Who's all here? How many viewers we got? Who's here? A nice 1,500. 1,500. 𝐒𝐴 is still 30, 40 minutes away. We got a good crew. I like that. Who's in the chat? I see the chat going wild. You guys are the best. I love each and every one of you. What's up, Ali G? Amy Crypto. I met her in Nashville. Great lady. Great lady. I've met a lot of great people in Nashville. She also has a YouTube channel. Let me see. I'll chill you for a sec. A blossoming YouTube channel. And she's pretty. So, you know, we can follow her. Let me chill it. There you go. She didn't pay me for this. She didn't say anything. Guys, she's not AI. People think she's AI. She's not AI. I'll put the link in chat. We have another person who actually I need to shout out as well. And that is Before Crypto right here. This guy, our man, he made the thumbnail for today. Shout out to him. Give him a follow. Great dude as well. Thank you, man. I appreciate you. Appreciate you. Who else is here? If you're here today, put a message in the chat so I can shout you out. Andy Bitcoin Census. Great dude as well. How you doing, man? I didn't see you in Nashville. Where were you? Where were you, bruh? I see Ayawi Warren Benemo. Great name. What's up, Bad Fox? Ben Berengar Crypto. Big Tuna Crypto. How you doing? Ben's Chair is here. Ben's Chair joining us for the most important, biggest, greatest FOMC across all timelines, dimensions, and multiverses. Aaron. What's up, Aaron? AJ. AL. Ollie. Ben. Big Tuna. I already got that one. Big Don. What's up, man? Blockchain Bonehead. Brendan Cerna. Cactus Leo. Carlos Lopez Caputa. Chemistry Bro. Coinchick is here. How you doing, darling? I wish you were in Nashville. Colin Stoltz. Crawler. Christian Nevarez. Cryptid. Zombie. Crimson. Colin. Crawler. You guys ready? Crypto 420, Crypto Hub, Crypto Incognito, Crypto Independent, Crypto Sharknado. How you doing, my friend? Crypto Pollo, Crypto Info, Cryptomi, Das Peach, David Brum. Met you in Nashville. A lot of people from Nashville are here. Oh, my man Rob is here. Robbie boy from Digital Asset News. I have to throw up your channel too, man. I got to. Hanging his fam to be here for the 𝐒𝐴 experience of a lifetime. Shout out to Digital Asset News and their community. Love you guys. Great meeting you, my friend. Rob is just an awesome dude in person. You'd love him. Great guy. Denny Doom, Dreadnought, Douglas, Ed Balboa, Ed, Fabio, Florida Crypto, Fajuda Bus, Furry Inferno, Gary C, Gasper. I'm doing first names only. Handy, Ivan, Jacob, Day, Jay, both J's, J Day and Smith, JB, JC, Jeff Tezos, Johnson's, Jim Kennedy, Jackson, Japernicus is here, Jose, Juma, Jay-Z, Karen, King, Peasant, Crypto, Kirby Crypto. I think you have a YouTube channel too, don't you? I recognize that. Chris Pax, another guy. We have all the YouTubers here. This is now a YouTuber event. Welcome. But everyone's invited. Leveler, L, Line in my pocket, loading name, Luke, Message. Dude, there's so many. There's hundreds. There's hundreds, and they just keep coming. Keep it doing it. Please engage with the stream if you haven't yet. If you're watching, put a message in the live chat. Hit that like button. Subscribe if you haven't subscribed. Share the stream. Vote in the poll. Join the Discord. You know everything. You know what to do. I trust you. Man, there's so many. I don't know if I can do them all. It might take like an hour. Lucky, Masario, Masej, Mohad, Marklar, Martinez, Mathis, Matthew Schmeedy, my man, Malgi Games on Twitter X, Miguelito, Mike Bennett, Mike C, Mike Seal, Monkey, Mr. Blank, dude, the whole fam is out in force today. I love it. You guys miss me? I missed you. I missed you a lot. That's why I'm here. That's why we're on early. Yeah, I'm moving tomorrow, by the way. That shows you my commitment to you guys. Back from Nashville. I'm moving tomorrow, but we had to go hard today because we go hard all the time. Multi-sig Dummy Muhammad. Wow. Niam. I don't know if we've ever had this many live chatters. MBF Forum, No Limits. Obet. Oh no, Y2K. P. Pelosi. Ooh. Related to Nancy Pelosi? Give me stock tips. Patrick Leishman, Patrick Power, Pecor, Peter, Philly Skills, Petor, Robbie1 Kenobi, my man, what's up, dude? Randy Abgett, Ragnar, wow, dude, it will not stop. Roro, Arturo, Sean, Sergio, shout out to Sergio, Shinonik, Screamer, Silpha, Psalm, Sosig, Splendid, Stefan, Stymie, Tails, Squashbuckling, Scallywag, Taylor, TYT, the Bitcoin Bunker, the Mad Catter, the Pickle, Tommy, Vapo Chilled, Windbella Workout, X77, Zach, VZ Fat Cat, Waldo, Uncle Fester, Ty Fox, Foxy Thorny. Holy crap, bros. I know I'm going to have missed some of you. I'm going to stop doing that. I want to shout every single one of you out, but I'll never stop saying names. You guys are coming hard. What are we doing? I know what we're doing. We have 7 minutes until the interest rate decision is in. 7 minutos. Here's what we're going to do. This is our tradition. Everyone pull up a tab. Pick your favorite search engine. Doesn't matter which one. Type in something along the lines of interest rate decision today, like right now. And at 2 o'clock, so in 7 minutes, we will all Google together. And I want you guys to put the decision in the chat with a source. Don't just put a decision. We need a source. And the source better not be your best friend's grandma's brother rumor. Got to be a good one. We're going to get it in real time because for some reason they don't give this to us. They just like give it to news. Or have we ever figured out why they do that? That is just like absurd. Doesn't it just seem unfair and weird? It's like, we're going to give this to like some people early. And when I say early, they publish it right away, but there's still fractions of a second. Like an algorithm could take advantage of that. Why do they do that? I don't think there's any answer though. I don't think anyone knows. I think that's just what they do. And we got to live with it. And we just have to, exist through. That's okay. Double check if you've hit that like and subscribe. We're going to have the interest rate decision published live here now, 6 minutes away. And then Jerome Powell, chairman of the board, will be speaking in just about 30 minutes. So stay tuned because it's going to get even spicier. It's going to get even spicier, boys. The spice has yet to even begin, and I will guide you through the spice. We'll make it through together. Oh, all right. I can't believe Tom Powell joined us, man. That's a rare. You know how hard it is to get Tom Powell? You can get Jerome Powell easier than Tom Powell. For those of you who missed the beginning, I think it was one of the better ones. What do you think, chat? Was it one of the better ones? This is our prediction for today. YouTube doesn't love swearing, but hopefully they don't care. Shout out to Tillin. You made this meme. I love this dude. The face and perfection. Perfection. If you haven't joined our Discord, do that. I'm just burning time because we got like 4 minutes. If I start into something, I will get ADD and lost. I'll forget. Pump to the downside, a little downside pump. Little red pumperoo. Encrypted quantum data. What is? Sell the news, says D's Nuts. I will listen. I mean, I take financial advice from anyone named D's Nuts on the internet. It's how I got this far. You know, and just Blazo tipping 200 THBs and a thank you. Thank you, my friend. I don't know what THBs are, but I appreciate them. We got a lot of new subscribers. I've been not paying attention. I've been on my game. We got Guesty subscribed, Nomad Star, Siam Prasad, Nuno Sosa, Cerebral Circuit, Chris Forge, CG, Richie Optimize, Rachel Brennan. Hello, Rachel. Merson, Ampa Boss Share, Rishab Singh, Juragex, Dario Boral, Jason Casper with that super chat, Darren Foe, Shane 42, Robert Argueta, Michael Merto, Cashpour, Ryan Paredes, Tajer Rozek, Gortuk, Bass Cruton, Matheo Setwashwano, Mr. Whale subscribed, Haru subscribed, lots of subscribers. If you're out there, I just re-enabled it. So if you subscribe, it will pop up and you will have your name up on the stream. If that's not incentive, I don't know what is. That's all I got. All right, we have 2 minutes. Dos minutos. 2 minutes, 45 seconds. You have your tabs open. Not enough memory. That's not good. I just got a weird, I'm going to close this. I got to refresh this. I'm getting a new computer when I move, by the way. Because this one, I think, is on its last legs. I've used and abused it too hard. I just had my chat tab, like, time out and say not enough memory. That's never happened. It's a new problem every day, but we're making it through. Ooh, even the YouTube streaming tab. Okay. At least we didn't lose the connection. That's good. We're still here. 1,600 viewers. Hell yeah. We are about to get the interest rate decision. Let's zoom in. Zooming in. Let's see. Bitcoin has tapped its bullish engulf. The interest rate decision is only 1 candle and 48 seconds away on the 1 minute. You're scared? Don't be scared, Andy. Papa Tom's got you. Come here. Get in these arms, bud. Get in these arms. I'll hold you. Don't be scared. Yeah, don't be scared. 2,000 viewers. See, you guys are memory leak. Yeah, I probably do have a memory leak. You're right. Drum hop. But we got to make it through today. Can't check that now. Don't be scared. What was I saying? Don't be scared. I don't know. We're going down. What are we doing? We going down? We going up? We going left? We going right? Best setup. Dude, Wick. My guy. Wick, I saw you in Nashville. Who else saw me in Nashville? Who else here? We have got 1 minute and 6 seconds. Be prepared. Don't be scared. I like that, Larry. I'm stealing that. Guys, get your tabs open. My alarm's going off. Get your tabs open. That was weird. We said 2,000. I don't know what's going on. Cryptocraft. I'm going to use Cryptocraft. We're going to the right, baby. That is the only thing that is for sure. No matter what happens, we're going to the right. I can promise you. That's my prediction. You feel sick? Don't feel sick. Just take a breath. Relax. I warned you guys a little bit ago. Trading this event is not the smartest choice. I do not typically open trades before this. We have been trending up into the decision. If the past spells the future, we likely will see that reversal on the interest rate decision here in 16 seconds. Start Googling. Remember, no publishes before, like, anything you find right now is wrong. In 8 seconds, like, it has to be after 2 p.m. Has to be after 2 p.m. Here we go. Drum roll. There it is. Start Googling. Who's got it? Who's got it? Oh, we know the answer, Dreadnoughts. We know the answer. Here's the volatility. It's here. Red candle, baby. What do we got? We're blasting off. We're blasting down. We're blasting left. We're blasting right. What do we got? Put it in the chat. Let's play Chirp Powell. Calm you down.
Money machine going bird. Chairman Powell, he ain't playing this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserves in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Lean. No change, which is exactly what we knew would happen, exactly what we had expected would happen. And would you know it? Would you know it? Red candles. Them beautiful, painful red candles. Oh no, I lost my picture. No, I lost the Chirp Powell. I mean, it's here somewhere, but I had a tab with it open. No, here we go. Here we go. The interest rate decision is in, boys, and guess what? There's no freaking data. No data allowed. There's no data. This meme. Let's go. For those of you tuning in, we've got 29 minutes until Chirp Powell speaks live here. Tom Powell joined us earlier. Whoa, we have a little kind of unusual price action going on here. Volatility absolutely kicking up on Bitcoin on the interest rate decision. Let's check in. The dollar liking that no change. Really liking that no change. Up 0.1% in 1 minute. For the dollar, that is pretty big. Let's take a peek at where it might be going. And it might be going back to the daily open, 104.4. Still down for the day despite the little pop from the interest rate. No change. Moving sideways, flagging out potentially. Yeah. Stocks are like the special friend, your special guy, your little buddy, right? Nothing, just not doing anything. I mean, it's got a little move down here, but basically just in the range of what you're doing earlier. Maybe painting a higher low, provided we can move back to 2 minutes ago's high. Maybe we should zoom out a little bit. Red candle on the 5. Dollar. Is it just me, or does it seem like every other asset is getting these moon candles and we're not getting no moon candles? What happens? What's happening? Why is this happening? What are you waiting for, Bitcoin? 2021's all-time high was BS. What's up, DVS Jot 74? How you doing, man? I missed you as well. Loud Civic 03, Fair, Red Hutchinson, Caudy, Docs the third, Josh Sweeney, Boris. What's going on? Our 2021 all-time high was bullshit. And now we have broken that all-time high, and our new all-time high is bullshit. Like 69K, now 47K, or not, 67K, then 47K if you look backwards at all-time high. 74K, again, dyslexic. What kind of all-time high is this? What's happening? We have an ETF. The ETF has bought billions of dollars in Bitcoin. What is going on? I honestly don't know. My guess, or my hunch, and you guys know this if you watch this channel, we're live here Monday, Wednesday, Friday, all day, every day, is that this is the boring phase. This is we moved up. We had all the hype. We sold off, hype got kind of squashed. We moved up all the hype in March, and we're going to move sideways until people are bored. And we can look at each other and say, we're already bored. I know I'm already bored too. I feel you. But that isn't capitulation bored. We might have gotten close actually for a little bit. But as soon as everyone stops paying attention, that's when Bitcoin likes to move. Yeah, look, we're just like barely higher. We got this barely higher high into the end of 21, barely higher high here 3 years later. Now we're just going to hang out here. I think it is very reminiscent of this time period. Last summer. Hit a high, things were exciting, chilled out, calmed down. Everyone got bored, kicked it up again. People got a little whipped up. But at this point, we're kind of more skeptical. They weren't really FOMO the same way maybe back in April they were. killed it off, moved sideways. Everyone got bored. Everyone said, that's it. That's 2019 repeating. We're going back to 15K. We're going to 10. We're going below 10. World's going to end. Sky's falling. And then as soon as everyone gave up, we started moving back up, moved to all-time highs. I think that's what we're seeing again here. We could see this play out realistically. I don't think we'll see this, but we could see this for a year. We could have a complete year at this price range. And that wouldn't even be like the worst. Wouldn't even be like the worst climb. We might not even have like a big sell-off. What if 53.5 is the low, right? It could be. Great to see you in Nashville. What's up, C? How you doing, man? Who else saw me? Ben Cohen dunking. I bet he is. I saw Ben Cohen in Nashville. I love that guy. I love that guy. When you look at him, you probably wouldn't assume, but he throws the best parties, like the absolute best parties. 3 years in a row, hands down, best party. I know. Don't judge a book by its cover. Maybe he does. Maybe he's not a party animal like we are, but the man knows how to throw a hell of a party. What's up, Mike? I see you, Volmer. Gadsbergs, how you doing, man? We've got 20-ish minutes until Chairman Powell will be joining us live. Are you ready for the Powell? What should we look at till then? What should we? What do you guys want to look at till then? What should we investigate? Bull flag. Let's go back. All right. This is like a little surprising here. A little surprising. We did get the reversal candle. Remember, this arrow was not meant for a price prediction. I wasn't saying 65.9 or anything. It was just implying that the uptrend into the interest rate decision typically reverses, and then after Powell speaks, we typically see that reverse again and end up roughly back where we were. So let's say back to 66.5, something like that. This low, I mean, I guess like it counts reversed from the daily bullish engulf level on the Bitcoin, but it doesn't really look like enough yet, does it? That actually is hella bullish. I feel like if we hold this low, we might see a continued rally into Chairman Powell speak, which we don't typically. 5 minutes a little uglier. 15-minute, yeah. We really are just sideways again. It's pretty brutal. We had bullish divergence painting on many time frames on our lows down into our lowest point in price. We saw RSI tick up on many time frames. However, we're now trending up and setting higher lows. RSI doing the same thing. So we are no longer actively painting bullish divergence, at least on I think on any significant time frame. You even go out to the 2 hour, you don't get it between these lows. 4 hour, you don't get it between these lows. This is not pretty. Not gonna lie, this like fall and then sideways is not a pretty way to go. Hold up 1 second, guys. I'm gonna give you just 10 seconds to hit the likes, the subscribes, hype up the stream, share it out, join the Discord. I just have to turn on my air conditioning. It's right next. It's getting hot and my heart rate's, I'm racing. I'm racing, man. All this excitement. We got 2,000 live viewers. Oh, hell yeah. Out of our 2,000 live viewers, what do you want to look at? We have 20 minutes. What should we do? I'm longing AC. Yes, I'm all in long on AC leverage. Smash the likes, Brent. Thank you, my friend Jasmine. Bearish YouTubers killing the bullish divergence. Interesting take, Real Bossman. Real Bossman. Interesting take. Vroom, vroom. Hot. Oh, yeah. Hot as hell, white. What's the temperature? Hot. 8. It's like 90. 90 feels like 90, like mid 90s. 85% retracement from 500K would be 75K. Get them cheap sats. I mean, over time, the one thing that Bitcoin has never strayed from is that given a large enough time frame, it always gets more expensive. Bitcoin always cheaper yesterday. The best time to buy Bitcoin was yesterday, and the next best time is today. That's what they say. Check the triple Qs, the 𝐂𝐲, 𝐿. What am I expecting Bitcoin to do? Honestly, nothing. We had virtually a 0% chance of anything happening today. In fact, I'll say this. Had something happened, had we seen an interest rate change, that likely would have been more bearish. That would have been probably the bearish outcome. Today, when Chairman Powell speaks, we're going to be looking for some very specific things. Unfortunately, none of them are going to be an interest rate change. We're going to be looking for forward guidance. We're going to see off the back of last FOMC and off of the back of the interview we covered here, he was sounding more dovish, more confident in inflation hitting its targets. We're going to be looking for that forward guidance. We're going to be looking for, are they going to state how many cuts they expect this year still? Probably not, but you never know. The rhetoric, the tone on inflation and progress towards the targets, etc. That's about all we're going to see. But we're going to make it fun, don't you worry. Who would participate in an edible eating contest? John Doe. That sounds miserable. I love myself some edibles, but a contest to eat edibles? No. Nah, bro. Nah. That sounds awful. That sounds like a real bad time afterwards. 𝐻USD. We can look at 𝐻USD. Today's the day. We don't have a ton of time. You know what? Rickson AI. How you doing, brother? We probably should look at XRP. I know. Tom Crown talking about XRP. What's happening? What's happening here? XRP, if you've been following our stream, has perfectly followed this trade. Perfectly. This arrow was not drawn in hindsight. This is not like we saw this later. You can find this placed in real time. XRP finally broke. Let's see. It broke its lows. Broke like multi-year lows? Nah, year low. Hit 38 cents, which seems pretty random to me. Recovered to 42. Broke back. You can see that it broke back. That's what he said. Broke back into its massive flag, wedge, triangle, whatever you want to call it. But that really wasn't enough to get me excited. Even though this looks great, still not quite enough to get me excited. The broke back, not enough to get me excited. Let's see. When we looked at it, hit 61.8. I sold some of my XRP that I had bought at 50 cents, like I said I would, and I told you guys I did. We're looking for a back test into this triangle. We got it almost perfectly to the wick. 54 cents, 54.5, something like that. Oh no. Almost perfectly. Send to back. There it is. Nope. I can't get rid of it. There it is. Perfectly. However, that still wasn't enough. I did warn you guys I wouldn't look to go long at the top of green candles. Let's wait for this pullback. 55-ish looks about right. However, this doodle, you'll notice, doesn't actually line up with the take profit target. I will admit that was probably a mistake, but I'm not going to change it now. We were looking just to test the top of this wedge again. If XRP, though, can break out of this wedge, out of this descending trend line, there's some pretty good upside targets. Pretty solid upside targets. This is a strong chart. No matter how you feel about XRP, this is a strong looking chart, at least in July. At least in the last 2-3 weeks. Like, you moved up, you retraced, you swept long liquidity, you traded sideways, and now you broke to a higher high even again today. I'd be targeting $1. Something. $1. What do you guys think? $1, 75 cents, 81 cents, 94 cents. I think it is likely to at least move to 75 if it can get out of this descending trend line. 75 cents. $1 is just the kind of the classic go-to. Money flow on the day, rolling over, VWAP up, momentum up. That looks good. That looks fine. Weekly, it could be better. Could be better on market 𝐕. Momentum picking up, the basis MACD line and the basis line returning to the 0 line here. We're seeing our histogram expand, showing us momentum is increasing a little bit. On the week, are you painting bull bear div? You might be. Potentially bearish divergence on the week. XRP needs to kind of settle up higher this week, and you see that RSI pull up. What should we look at next? We don't have a lot of time, so we're not going to be looking at, low caps. We're not going to be looking at shitters, stuff on Sol. Here we go. There we go. The FOMC trading schematic is seemingly playing out again. For those of you just tuning in, 65.9. This isn't like a target. This is simply a description of price action we placed before the stream started. And it seems to be playing out. I'm going to set alerts. Set alerts that are low, set alerts that are high. I'm going to check the time. Exactly 15 minutes until 𝐿𝐴 is live. Got almost 2,000 live viewers. Hopefully that kicks up when 𝐿𝐴 gets here. But hell, that's still an amazing show. Well done. I appreciate every single person here today, especially D. Stoichevic, who just subscribed while I was talking. Black Coffee, Teku, Dude TGB, Faraj. I think TW Crypto, I might have gotten that one. I'll pull up Ethereum. Who wants to see Ethereum's? Also, vote in the poll. Almost 3,000 votes in the poll. We can get those numbers up. Obliterate that thumbs up. First interest rate cut will be 33% of us said today. Let's go. I mean, I like that energy. But 44% saying September. So nobody vote for today now going forward because it didn't happen. Although there is a non-zero chance 𝐿𝐴 could come out and be like, I'm doing it anyway. I don't care. You might win still. November 11%, 2025 12%. Keep those votes going. Engage. What's up, Paulo Boyle? You think the rates are a catalyst to get us over all-time high again? No, I don't think the cuts are actually like a bullish thing in general. I think global liquidity will play more at that quantitative easing, or at least easing the quantitative tightening can be a play on that. I'm honestly not sure. I was talking about this a little bit ago. Not sure what's going on with the corn. Remember, we are still wildly ahead of schedule on the corn. We hit a new all-time high before the halving. That's never happened before. Like I said, we could spend a year sideways and still pretty much just be on track with all their bull runs. We could see like a new all-time high next year in December, right? That would be very Bitcoin-esque. November, December. I don't know. I'm not on that bus. I think this happens sooner than we expect. You're the man. I appreciate it. Kick the podium. What's up, Jess H subscribing. 𝐂𝐴 tuning in. Powell will be joining us very soon. Cass, you know what? I will look at Cass, though I just said I wasn't going to look at like kind of smaller caps. I do believe Cass hit an all-time high again. And you know what? It's proof of work, so. And I want to look at it. Before we look at the Cass dollar, let's look at the Cass versus Bitcoin. Making an interesting move here. Since April of this year, Cass has begun an uptrend, setting higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And here we are. Cass, I think the USD pair is at an all-time high right now, or maybe right below it. But our BTC pair moving back up to June's high against Bitcoin. Breaking that level, let's throw a fib on it. Let's connect our swing high to our swing low. Ooh, that's some beautiful confluence. That's about as sexy as confluence gets. Our local move here indicates that if it breaks the high of June, the immediate upside target sits at, so let's call it 32. That's the high. 37. So a move of over 10%. 13, 15%, 14. Against Bitcoin, not against the dollar, against Bitcoin. So if Bitcoin moves up in dollars and that continues, it will get a bigger than 15% move, which I think is rational. But that will bring us just back to February's high. But it does set the chart up to look pretty good. Let's invert this. Cass against Bitcoin, inverted. What do you see? What do you guys see here? I see a potential really big head and shoulders, which would be bullish. Let's go to the dollar pair. Currently at an all-time high, breaking it this week. Let's go. 20.5 cents. So not really melting faces yet. Let's clean up our chart. Cleaning up the chart. Here we go. Move up, higher high, higher low, higher high, higher low. Continuing the same pattern as the Bitcoin pair, showing that extra strength. Money flow, gorgeous. This is one of the stronger charts in crypto for sure. Absolutely. Last time we looked at Cass, we were hoping to kind of sneak in a 12.8 long. Didn't get it, at least not yet. Doesn't look like it's going to fill, and if it does, it looks like I wouldn't want it anyway. We had a lot of extensions looking for targets. Let's continue that practice. 26. These are not big. These are not really big extensions. 34, 35. Okay. Here we go. 10 minutes till Chairman Powell is live. Stay tuned. We're just burning time till then. We're looking at the CASPA chart, one of the stronger ones in the space, in my opinion. Daily looking all right. We are at an all-time high, and we don't have an all-time high in RSI. That doesn't bother me here, though. I'm not worried about that here. For those of you thinking about FOMOing right now, I mean, you're at an all-time high, so kind of, if you're ever going to just blindly buy the tops of candles, though I don't think it's ever a good decision, it's better than kind of, I don't know, a mid-range pump, right? Under resistance. There's no resistance above you. CASPA has never traded at this level. There's no resistance above. There is fib extension levels, profit-taking levels, psychological numbers like 25 cents. That could be in play. I still would caution against FOMOing in because buying tops of green candles, man, is not our game. Let's take a peek. Even a really conservative, that's not that conservative, even a pretty simple, wait for that previous resistance to be tested as support. 19.8 cents. Not a huge move, not a big change, really. Let's see. 3-4%. But if you're going to trade this on leverage, especially, that 3-4% can mean not getting liquidated versus liquidated. I don't think this is even the best trade. Maybe we look for another higher low. You never know, though. Once these get ripping, not a lot of opportunity to get in safely. I can't really find anything. I really don't want anyone to go long at like 19.8. Maybe if you're a spot man, you know, maybe you're going to get your spot buys. It's a little different. I could see a back test of the previous monthly resistance, 17.1. We did test it in this month, so kind of not ideal to have already tested that. Not ideal. But maybe you could see it happen. That might be playable. Honestly, there's been a good amount of opportunity to enter this chart in this coin. At some point, there won't be. You've had many opportunities, right? CAS has had lots of pullbacks. This price action kind of looks like this. This is like a bigger version. The only objection, so I think this is a bullish chart. I'll move on after this. The only objection I have to this chart from a chart perspective, from an analysis perspective, is this. You have moved your biggest pullback. I know there's a lot here. Bear with me. There's a lot on here. Your biggest pullback was last year in April, March. Using our fib, we were able to eye out 15, 19 cents. You have hit your measured move. You've continued higher. Rarely do I really use the 2618. That would be like the next macro target. I would say 34.9. Not a bad profit-taking target, but you're already kind of extended on this fib. So what we would typically look for is another pullback to then draw another fib to get higher targets. That's just the process I apply to everything. You guys see me do it. The issue is these aren't big pullbacks. They are, but not in a macro sense. So the extensions that it will project out don't give us very big targets. Like I said, from our biggest pullback here in April, our 1618 is 28 cents. I mean, that is significant. That is a 8 cent, 40% move. Like, that's significant, but that isn't kind of crypto significant. You know what I mean? At all-time high runners, it's not that good. Our measured move does line up with that 2618 from here. So maybe I just say 35 cents, 34.9 is the target. But if you continue this climb up with no big pullbacks, no flushes of liquidity, you kind of you start to get squeezed on your upside targets. And that's my only objection. It's my only issue. The rest of it looks great. Done. Cast done. Coming into Chairman Powell, hopefully he will save this price action. Dude, this just slaps every time. Like every FOMC, we say the same thing. In every FOMC, it seems to follow it. We'll see if it reverses when Powell speaks. Patterns always break eventually. We have T-minus 5 minutes, 30 seconds. Give me a tick. Boom. There it is. There it is, live, coming in ASAP. What's up, Jesse? Lumborn, Joe Parkins, Fulma. Fulma Maya Taza, Doug Varble. Keep those subscribes coming, guys. And if you're new to the channel, new to the community, jump in that Discord, discord.gg/TomCrown. The fun's about to start. This has all been pre-fun. This is the pre-game. We haven't even gotten to the good stuff yet. It's eminently upon us. Close more tabs. I meant to show you this, but like, this kind of seems late. Trueflation, a non-governmental measure of inflation, has us at 1.51%. The government, the U.S. government, CPI, whatever, index they use, has us at 3%. So half of that reporting from true inflation. Which do you think is correct? Which one do you think is more honest? I think you can feel it in your pockets because the government, I feel like, has underreported inflation forever. 1.51. We actually dropped below 2%, I think, many months ago. So if Chairman Powell paid any attention to this, they would already be at their target. Just change your targets, right? One thing I noticed today, and I'm not gonna click it, I'm not gonna show you guys. Apparently, trueflation is crypto. There's some token. I don't know. They don't. We ain't gonna pull it up. It's not important. Not even important. Ooh, our views. Our views are fluctuating. Okay. Is everything set up? I'm gonna do a volume check here. Volume check. That's gonna need to come up. That's gonna come up. I'm pretty sure I've gotten copyright claimed for that elevator music, so I'm not gonna play it. What's up, John Foster? Cool hanging with you at Litecoin. Hell yeah, bro. It's good to meet a lot of you. I asked you guys who was at Nashville and who saw me at Nashville. And I will admit that then I got distracted. You guys know how I operate. You know how I operate. So if you could, maybe just one more time, who was there? Who saw me? Because a lot of you guys, you know, you have a username on the internet. You can't recognize you in real life unless you have a picture. There we are. Powell coming in hot soon. ADHD? Nah, not Tom Crown. ADHD. Please teach Elliott Wave Part 2. Alien, I will put it in the books. Lifer, I saw Lifer. We hung out. Love that guy. One of my favorite peeps. You were in Nashville but didn't get to see me, Karen. I'm sorry. I know, I ended up accidentally, like unintentionally ghosting a few people because I was... Guys, we have like a few minutes. I'll gush for a sec. You guys know I go to these every year, and every year, maybe a few of you knew who I was in previous years. Like, maybe like 2, 3. A lot of people, even included in those 2 or 3, were like, hey, I know you from when you were on Around the Blockchain, or when you were on the Altcoin Dailies channel, or like from other people's content, right? Paul Bear Network, whatever. This conference was insane in the fact of how many of you came up to me, knew who I was, and how many of you were people who recognized me and watch our content every day. I had more than a dozen people say I watch your stuff every day. Dozens of people recognize me. It went from like 2 or 3 to like 50. I lost count. It was awesome meeting you guys, but I ended up unintentionally not meeting up with people because, wow, I couldn't even get through the conference. Like, it was bonkers. It was warmed my heart, made me feel special. Appreciate you. John Wick was there. Yeah, John was there. Was a star. Thank you, Wick. Like, dude, even when I was walking down Broadway at night, like, without my glasses on, there was more than one time people were like, Tom Crown! Like, just on the street. Like, not even in the conference. It was bonkers. You were in Nashville? Right on. Right on. Getting fired soon, Toby. Don't get fired. Ooh, speaking of fired soon, we have 40 seconds. 40 seconds, I think, until Chairman Powell should be joining us. He's always fashionably late. We got some time. We got like a minute at worst. What was the interest rate decision, JT? Nothing, just as expected. Nada. Diddly. But there wasn't, I don't know, there really, our poll shows that lots of people said today, I think they're being enthusiastic. There weren't any real, like, to my knowledge, any analysts, any economic people saying it was gonna happen today. Maybe I'm wrong. Can you guys name any? Maybe Crypto Savvy was. Maybe Savvy was. I don't know what that guy's saying. Here he is, the man, the legend. It is going to be hard for him to follow up Tom Powell. Tom Powell really encompassed the energy of today. We'll see. There he is. Everybody shut up.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments.
Asian Gina.
Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping the longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Gina's always first. Gina. Gina. Go, Gina. Just Gina. No one else talk. Or Asian Gina.
Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage.
Get 'em.
I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Great question. Beautiful question.
So,
You're beautiful. Lovely.
On September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
Howard.
Great question, Gina. Beautiful
just
as ever.
to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way.
Ask him
I'll
again.
give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. we just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
He's saying watch the next CPIs. Colby. That's what he's saying.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say
Dollar
really the path
tanking
ahead
again.
is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
What he can say, meaning there's things he's not saying that he does know. Boom.
Nick Timmeros of the Wall Street Journal.
Asian
Chair
Gina.
Powell, you've said before that you wouldn't wait
Let Chair
until
Powell
inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market, too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see. We've seen that over a period of a couple of years, and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past, you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our 3. We have 2 mandates, as you know. Labor
we have
market,
2 mandates.
Maximum employment is one, and stable prices is another. So we weigh those 2 things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say, again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So those 2 things are working together, and we're factoring those both into our policy.
Chris.
Asian Gina. And
Chris
only
Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not or would you consider preemptive cuts to prevent, if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
There was
So
a
I
meteor
wouldn't
full
say I
of
wouldn't
inflation.
Want
Would
to
you
see
cut
any
for it?
other cooling. It would be more of a material difference. If we'd be looking at this, and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like, again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low. And we'll just have to see what the data show us.
And
There
just to
is no
follow
data,
quickly,
but
wanted
drink
to see
anyway.
what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Asian Gina? If they say Asian Gina out
Steve
loud, I'll
Leisman,
lose my
CNBC.
shit.
Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question.
I think Chair Powell
Talk
just
about,
laughed.
Are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen, significant movement in the labor market, and, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this, we raised rates a year ago at the July meeting. And if you look at the situation in the economy a year ago.
Ooh, it was a year ago.
Inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market has, I think, unemployment was in the threes, mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have, we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most rate, you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of
Rachel.
good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report, and frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about, if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably down to 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices, or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off, and labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question, the time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. We get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just it, and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in and so much happening between now and the September meeting, and we'll make a judgment.
So much data, none of which we have right now or here, but so much data,
Thank you, Mr.
bro.
Chairman. Edward Lawrence, the Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
Dude, he copied his
So as a
entire
follow-up
speech
then,
from
so could the
Tom
Fed
Powell,
then be
the
behind the
entire
curve?
thing.
Because you said some of the reports last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been,
Gotta go fast.
We had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have we had a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see
How
more
would it
good
be
data.
possible if we weren't getting closer to it?
The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was a strong sense of the committee. But it's a conversation that we had today. Certainly.
Are you suggesting time might go backwards and we'll get farther away from the decision?
Courtney Brown from Axios. Thank you for taking our questions.
Maybe.
When the
Time
Fed
travel
was raising rates,
confirmed.
there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation, rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Did I miss Asian Gina? There's no way. It's impossible.
Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market. And we're watching carefully to see if it turns out to be more. If it starts to show signs that it's more than that, then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think history doesn't repeat itself. It rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown in the economy and the resulting supply problems in the face of, admittedly, very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
No vape cuts ever. No vape cuts. We've broken the low. RIP dollar.
With Bloomberg, there seems to be quite a difference between what the anecdotal data are telling us.
There's a lot of
such
new
as
people
the very
asking
recent,
questions.
Downbeat Beige Book
Taking up
and the
Gina's
hard
time.
data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data.
So I do take that seriously, and the Beige Book is great. What's even greater is hearing
the Red Book.
Reserve Bank
Cooler
presidents
book.
come in and talk about their conversations with businesses and business leaders and workers and people in the nonprofit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or a really
Bitcoin
bad
looking
economy.
good.
It's one of there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's again look at the aggregate data. Aggregate data is particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data, especially, it's very hard. GDP data can be volatile quarter to quarter. So it's just hard to measure economic activity. There are it's just difficult to do. So I look at both, but I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
The note so far is nothing was said. I think
you.
he's slightly dovish
Joe Kent with
saying
CBS
not
News. Chair
September.
Powell, thanks for taking our questions
Agent
today.
Gina, I
you
knew
have
it. Technically, you're
consistently
wrong.
said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's first
Getting
of
hot
all, we haven't
here.
made any decisions. I would say it this way: haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation again is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary.
That wasn't
we don't
funny.
change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician,
terrorism.
or any political outcome.
They don't.
The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks.
There's no data.
And not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. We basically, we have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. We're a non-political agency. We don't.
She can
we don't
ask
wanna be
all the
involved
questions
in
she wants.
politics in any way, so we wouldn't do that.
All day. Another question, Gina, or Asian Gina? Another one?
Thank you, Chair Powell. Nicholas Jasinski from Barron's
Chair Powell
Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are
About
always
tree fitty.
meaningful differences. There are, and we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. No one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Get this child off stage. Who let him in here? Little Timmy, get
Hello,
out.
Jean Young with M&I Market News. Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
You know, I don't want to say, I don't want to be really specific
Yeah,
about what we're going to do, but
These
that's
people
not
know
that's not something we're
he's
thinking
not
about
going to
right now.
answer these. I don't know why they ask. It's waste time. Get Gina
Of course,
back
I haven't
up.
made any decisions at all.
Gina first.
As of today.
Gina.
Thank you, Chair Bill. Jennifer Schonberger with Yahoo Finance. Not to get ahead of the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
All right, Jennifer.
Well, so
Gina Latina someday.
You know, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that, and then we have an opportunity to comment on that. Then we have an economic go-around, and then this morning we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this, and there, you know, there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy, and so in the minutes we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and you know, but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming inflation comes.
How do data
assuming
come in?
that the totality of the data supports such an outcome, no question. That is the case. That as I mentioned,
markets are liking this, except for the dollar.
We think that the time is approaching, and if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
There's no data, guys. Never was, never will be.
Hi, Chair Powell. Nancy Marshall
Chair
Genser with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
That lady looks like a lady who'd tell you you're
This is the judgment
dawdling.
that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to, cool off any more for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September.
Could be.
If
If
the data support that.
Could be. If the
And
data.
have the
It could
chances
be.
of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market. So that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see which way the economy heads, and I think if we are to respond to weakness, we're certainly well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
If you don't know, who does? No one.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
Yeah, I mean, I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we have to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, you know, when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time, you know, discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, you know, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on that, on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Is he okay? He keeps conjugating verbs incorrectly. He doesn't usually do this. Last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot.
Good.
With Fed now being in the books for a little over a
Trade
year,
fly, my
there
guy.
hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an
Let's
update
go, this
on
guy.
where things are with
Let's
that.
go.
Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
How do you feel about Bitcoin?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things, the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed, because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there.
Don't lie to me, Chair Powell.
I think it's work that we need to be doing, which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
Don't lie to me, baby. Don't lie to me. There you have it, folks. Another Chair Powell classic in the books. It was truly the most important, biggest, greatest FOMC across all dimensions, timeframes, universes, multiverses. Origin story, I don't know, canon, fodder, whatever. It was what it was. Nothing really happened. We kind of expected that. No interest rate cut, not a surprise. We definitely saw that coming. Here's my quick take. If you missed the beginning, you missed Tom Powell. And Chair Powell stole Tom Powell's speech almost word for word. Let's start there. But Chair Powell's rhetoric, definitely on the dovish side. Definitely in the things are coming into alignment side. However, I interpreted his language as cuts are coming, but they're not. I don't think he was signaling September, Chad. I don't know if you guys agree, but it didn't feel that way to me. To me, it felt exactly as we have been prophesizing. All of you guys here, not just me, all of us. I don't think we get a cut until next year. Maybe we'll be wrong. Doesn't really matter. They're going to come eventually. And he's signaling that they're coming sooner, I guess. Looking for the data. Remember, the data doesn't exist. There's no data. There never was or never will be. If there was and ever will be, they would have it. They never have it. So it doesn't exist in my mind. Bitcoin followed the blueprint perfectly. If you go back to the beginning of the stream, exactly as predicted. Stopping out longs, stopping out shorts, getting back roughly to where it was, though it does seem to be taking a little bit of a dive here. We went into kind of what the FOMC might have in store for us based on this year's FOMC. So it's a good watch. Go back and check that out, guys. It's great to be back. I had a great time in Nashville, but I missed you. I'm never taking that long off on streaming again. However, as soon as this stream ends, I'm going to start deconstructing the stream room because I am moving to a new house tomorrow. Not looking forward to it. I'm ready to be in the new house, but man, moving sucks so many balls. We got to see Gina. We got to see Asian Gina, so my days are made. I got a lot of work ahead of me in the next 24 hours, but we will be live, provided nothing weird happens in the move with the internet or the computer. We'll be live Friday. I'll update you guys then. Thank you for tuning in. The next FOMC will be in September. Yeah, actually have a month off, which sucks, but I know you'll be here. If you haven't joined the Discord, hop in there, discord.gg/TomCrown. Sign up with LuxAlgo or use my link and you can get a month risk-free trial of LuxAlgo, the #1 indicator company. They have hundreds of indicators. They make the best stuff. Metasignals, metasignal.io. Check that out as well. Our other sponsor, you can get a free trial with link. Great company, makes algorithmic trading signals. They're phenomenal. Check them out. Decide for yourself. Last thoughts here. Said this. Did it seem like Chair Powell was struggling a little bit today with words? I mean, he's always struggling a little bit. You know, it's an onslaught of the same question. He can't say anything. But did you guys notice how often he failed to conjugate basic English words? He said the data had, like, I can't remember all of them off the top of my head. It was very odd. I don't really remember that happening in the past. And it caught my ear multiple times today. I hope he's doing well. We love Chair Powell. I love Chair Powell. I don't want him to be sick. I don't want him to age, but apparently it's the way of America right now. A bunch of old people run the country. But anyway, that's all, folks. I love you. Jump in the Discord. If you sign up with any of the things I mentioned or any of the links in the video description below, get access to our VIP exclusive private trading rooms in that Discord. Cost you nothing. Till next time.